well as Kunal for joining us this morning, giving us that perspective. Let's bring on board a fundamental voice. Mahesh Patil, CIO at Aditya Birla Sun Life AMC, joining us. Hi, wishing a very good morning, Mahesh. This is Harsh here. Let me first
Good
start
morning.
off with how you're viewing the index at this point. We've come off the record highs and we're likely penciling in double-digit growth. GDP growth came in ahead of estimates, which was a positive surprise. Sustainable, and what's the earnings trajectory looking like in your opinion, and therefore how should valuations look?
Yeah, good morning. So, yeah, while the GDP growth, the real terms was a very, very strong number, but one should keep in mind that the nominal GDP growth was still weak, right? So it's more because the inflation was on the GDP deflator. But having said that, I think that is still looking at the rear view mirror. Looking forward from here, we are seeing that there has been some pickup in activity, especially on sectors like, say, for example, automobiles and other consumer-oriented companies. And I think that should get reflected from the second half onwards. Also, the impact of the rate cuts, what we had seen earlier, okay, the lag impact of that should start to trickle in. So I think overall, I would say that from the second half of this fiscal year, we should see, at least from a corporate earnings standpoint, a recovery. The growth, which has been in the single digit for the last 4 quarters, I think that should move up to into the low teens. And that's the outlook what we are presenting for the next 1 year. And that should bode well for the markets, which have been kind of been lackluster or kind of in a consolidation phase for the last 1 year. Only the last couple of months we've seen some traction over there. I think that should start to gain momentum over there. Also, now India's growth rate, especially the earnings front, should be now comparable to the other global markets, especially the other Asian markets, which have been growing in the double digit. And that should mean that the FI flows, FIs which have been negative and been sellers in the market, should start to look at India. And we've seen that in the last couple of months. FI flows have at times been positive. So from a liquidity standpoint, also we think that it should support the market. Overall, I think we see that the GDP growth on a medium-term basis should be around, say, 6.5% sustainable at those levels, which should be a reasonably good rate to look at.
Interesting. And Mahesh, hi, morning. Basis that, what should one's sectoral bias be?
So, given that fact that the growth is to some extent being stimulated because of the government push, the tax cuts, the GST cuts, what we have seen recently, and the interest rate cuts, all that should really mean good for consumption, discretionary consumption. We've seen that post the GST cut, the auto sector has shown good numbers, and it is falling through in the month of November also. I think that should continue. So all the sectors which are not necessarily at the lower end of the consumer basket, but somewhere in the middle and the higher end, I think that should do well in the coming quarters. Also, the pay commission, okay, which will come in next year. So that should mean that the overall consumption story should have more legs going forward. And given that sectors like, say, for auto, retail sector, then other consumer discretionary sectors, I think that those sectors, I think, should do well. Government capex is going to take the brunt because of the limited scope in the budget to really spend. So I think those sectors might possibly take a backseat, which had led the earlier rally after COVID. It was led by the government capex. I think that should take a backseat. And even I think once the trade deal is done and it looks like it's around the corner, we should see some of the export-oriented companies which have been slightly under pressure. I think they could see a bounce back over there. So I think that's the kind of a broader outlook on the sector is where one should be betting on in the medium term.
Morning, Mahesh. What's your take on PSU banking sector? That's been the sector of the year actually. Means if you look at it.
So PSU banks have done fairly well. Their growth rate, especially the large PSU banks, has been almost comparable to some of the large private banks, and that has we have not seen that for a long time, right? In the earlier periods, the private sector were growing significantly faster than the PSU banks. And overall, the overall capital structure and seems to be fairly well capitalized over there. Credit costs are also running fairly low. Having said that, I think PSU banks, while the near-term outlook still looks good, we would like to believe that in a situation where now liquidity overall in the banking system is improving, and with the measures taken by RBI, right, to reduce the risk weights and the loan to deposit ratio. So that would probably give more elbow room for the private banks to accelerate in the coming quarters or the coming years. And also the retail lending, which had kind of slowed down. I think that's where the private banks tend to do the best. I think that should also come back, okay, looking at overall the consumer demand if it comes back. So while I think PSU banks still look decent from a fundamental perspective, but from a structural perspective, I think the private sector banks is where I think where the compounding could be higher.
Two macro events. One, the currency or rupee, depreciation almost close to 90, and the second, the MPC meet, which is on Friday. What's your expectation for both of them?
So rupee, if you look at it, it has depreciated against the US dollar, but it has actually depreciated more against all the other global currencies, right, which have appreciated against the dollar. So in fact, it's been a sharp depreciation, what we have seen in the last 3 to 4 months. And with that, now the rupee is, which is to be always slightly overvalued, is now at the fair zone or slightly undervalued at this point in time. And while there has been some pressure because of the balance of payment, we have seen the current account deficit shoot up. But we don't see a major challenge there on the balance of payment as such. It was probably 1 or 2 months, okay, where we saw it, the current account move up. Overall, with oil prices remaining low, and I think it should be under control. I think we don't see balance of payment going deficit going more than around 20 to $30 billion, and we've got around more than $700 billion of forex reserves. So I think it should probably consolidate over here. We don't see any further pressure over here. And in terms of the policy, RBI policy, expectation is that you could see another one more rate cut in this policy. Though the recent GDP rate print, which is kind of strong, there is some kind of a doubt whether it will happen. But I think underlying, if you look at the nominal GDP growth, is what we should look at. And the fact that inflation is still very low, well below the target, I think there is room for a rate cut in this policy.
What are you hearing about auto companies, Mahesh? Are you seeing a sustained demand for some of the auto players, especially at the entry level?
So yeah, I think the month of November also, the numbers, okay, which are now coming in, suggest that the underlying growth, what we saw in the month of October, is continuing, and the price cuts, what we had seen post GST, I think that is helping to sustain the growth beyond, and it is across, okay, the four-wheelers as well as the two-wheelers. Again, this sector is coming in from a long period of downturn, right? Pre-COVID and post-COVID, it took a long time to really reach the pre-COVID highs. And given that, I think the overall, rural economy is doing well, monsoons have been good. So the rural demand also especially for two-wheelers and the lower-end four-wheelers, I think that should continue to remain fairly strong. So I think you could see stronger numbers in auto in the coming quarters.
Interesting, and I guess that's already reflective in the way some of the stock prices have actually panned out. But Mahesh, great to have you today on the show. Thanks for your time.
Thank you.